Good afternoon, good people. How are you all doing today? This is Clarissa Pace, bringing to you another powerful income shifting strategy that you need to learn or that may empower you to teach yourself to save thousands of dollars as well as teach others to do the same. So being that we are on our private Facebook page, plus this will be aired on YouTube, I want to give you time to join in. So let's give it a minute and then we will get going, okay? I always have to find myself on the page to make sure that I can see you guys when you are joining in on the training, okay? So give me a minute. Let's see who's there. We're going to see who's there. All right, Team Vision, are you there? All right, all right. I think I see about two of us here. Do I see two? Okay. Don't want to get an echo, so I'm going to, nope, I did the wrong thing. Got this new phone, so I think I'm turning down the wrong thing. Okay. Speak to me so that I can see that you are here. Not sure how all of this works, okay? But we're going to make it happen. All right, this is our opportunity to learn more about how to save on our taxes and step one in income shifting strategy. So it's all about increasing your cash flow, and the greatest expense that you will ever have, hey Equine, the greatest expense that we all experience is in taxes. I think you will agree that we have, not only do we have federal taxes and state taxes, but before we even get our paychecks, if you have a job, before you even get your paycheck, you have taxes that are deducted, right? Like FICA, Social Security taxes, Medicare taxes. And then the more jobs you have and the more money you make, it also means the more taxes you will pay. There are also taxes like property taxes, real estate taxes. Hey, Patricia, how you doing? Real estate taxes. You guys know, just go ahead and list some more taxes that we have to pay. Grocery, sales taxes. Man, you name it, we are always charged taxes. I mean, when you go out of state, there are state taxes that are created. So taxes are everywhere. And let me say this, because I teach children, taxes, according to the government, are not bad because they are supposed to be used to actually create better roads and better transportation, sanitation, keep our ecosystem air clear and all of these kind of things. But, you know, one day we may talk about how the government actually takes a lot of our taxes, and those tax dollars are not really funneled where they should be. And so therefore, what we do in myEcon is we have actually showed you financially how you have control over many of these taxes, or at least how much you are taxed, and you can actually gain that back legally. So last week, what we did was we shared with you the W-4 form. We always start, if you are a working class citizen, you need to properly complete that W-4 form correctly. And so what that means to you is that if you complete the W-4 form correctly, then you don't have more money taken out of your check than necessary. It also means that you have the power to decrease the amount that's taken out by becoming a home-based business owner. If you're listening to this video in our private group, then you already are a home-based business owner with myEcon Incorporated, okay? Now, if this is your first time listening to this video to learn this, then this is your opportunity to become a member. And then thirdly, if you are a member who actively exercises your right to save on your taxes, then you may want to truly get up and operate your business with the intent to make a profit, so that at the same time, the expenses you incur, you will be able to lower your taxes. Because the one thing about it is that with this new tax system, you will have to have a business in order to save anything on taxes. For the first year, it's been reported that Many middle class, maybe low class citizens may have seen an increase on their paycheck this year due to the tax cut, act, the new tax cut act. However, in the next couple of years, you're going to begin to hurt from this new tax cut because there are things that are still changing and there are things that you don't understand. And actually, if your situation changes from year to year, then your advantage of that new tax law is going to change. So what will last forever, pretty much right now, are the taxes that tax deductions that we are afforded the opportunity to have as home-based business owners. And if you reposition yourself now, then later you won't be crying. And certainly as your myEcon leader, been in this business 14 years, I don't want to hear any crying when you have the opportunity to save on your taxes. So let's just continue to keep that clear, that you must be a business owner of some type in order to qualify for these deductions, and you must be a working business owner, okay? So we're going to talk more about that, and you have certainly, you know how to work your business. So let's get that going. So without further ado, though, I want you to understand where we come from. Last week, we started our training. I'm getting ready to share my screen. We started our training because we wanted you to actually see how to complete that W-4 form. We also gave you some homework for you to go and look up terms, because what you do need to understand as an individual, you do not have to be licensed. You do not have to be have a degree to take care of your money. You just need to know some terminology and what it means, basic terminology, so that you can take care of you and your family, and you can pass this on from generation to generation, okay? And so it doesn't take much, but it empowers you if you say, listen, I never knew what tax liability meant. I never knew what deductions and credits meant. I never knew what allowance certificate was. I never knew how to understand these things. But now I find out that they were really not hard for me to know, because they are, the answer to these questions are right where I can find them. Let me tell you another advantage it does. It stops people from marketing you heavily with their professional skills. Now, certainly, I'm a professional in the area of credit, business credit, and taxes, okay, and marketing. And certainly I have nothing, there's nothing wrong with getting the help of a professional, but every professional is not full of integrity, okay? These professionals are out there to sell you their line so that they can make more money. There's no if, and, buts about it. So that's the same way IRS is a big business. They want to make sure that they make us afraid. Every year under tax auditing training, we find out that it's their job to make you afraid to take your legal deductions, okay? Not only them, but there are certain people in the credit area, certain people in the market, everywhere, bankers, bankers don't tell you their secret. And we're gonna come on and talk about the banker's secret, but they don't always tell you their secret to getting your money. They just dress up real nice. They appear to be nice, and then you go and trust them. So there is a reason for these terms being placed out here for homework for you, because out of all of your busy schedule, I would say most of our personal schedules are out of balance due to the fact that we put more time into building other people's wealth. Listen, I don't care where you work. It can be for the education school system. You can take pride in being an administrator, a teacher. You can take pride in being a police officer, a chief of police, a fireman. You can take pride in being a bank assistant, a bank, VP at the bank or whatever. But the bottom line is you're building somebody else's wealth. That is not coming to you. So it, as I always like to joke about my church background, it behooves you, okay, to get in a game of knowledge and to be empowered, and not only get in a game of knowledge, but apply that knowledge, because if there's no application, then there is no breakthrough, there is no financial freedom. And so you can't just talk it, people, you got to walk it, okay? And it's very, very simple. So on that note, let's see if we can get started today. And I want to show you how to how to access the tax liability calculator. You know, I am so proud of myEcon because we've been doing this for our myEconers, and we finally picked it up and added it. I think it was last year, a year before last. So even if you missed my video in your back office, you can go to the W4 video with June Collier, and he is talking about the tax liability calculator. Okay, you just get a little special touch from one of your leaders out in the field. Okay, but it's always accessible to you, and this video is being recorded so that you can go back and watch the video. And remember, as you're watching this video, people, give me some likes, give me some hearts, give me some thumbs up and things of this nature to let me know you understand and you like what's going on. Give me some loves and all that kind of stuff, okay? All right, I am going to share this screen and get us started, all right? Here we go. All right, I'm gonna go over here. All right. Okay, now everybody, let's see if you are actually seeing this screen in front of you. This screen is what we call our IRS withholding calculator. And people, just want you to know it's very simple to find this calculator. It's not lost. I'm highlighting the link. Okay, anybody want to post this below, you can, but it is simply found on irs.gov, okay, /individuals/IRS-withholding-calculator. Okay, let me say that again. It's irs.gov/individuals/IRS-withholding-calculator. Okay, now, wasn't that simple? That's your first step. Just go on and take a look at it. So I do this because I want you to know that it's there. I could create PowerPoints and just talk or whatever, but in my point of view, I think that you need to see this so that you know where, first of all, it gives credibility from where we're coming from. And then number two, you know that you can access it too just as easy as anyone else who is training you, okay? So in the first part, last week, we showed you where the Form W4 is located. And listen, guys, the Form W4 is also located in your back office of myEcon. Remember, you do have a website, and that website has everything that you need. Everything we teach is in that website, the myEcon website. Some of you are ISP members and may have gotten lost in the shuffle, but I want you to know that you have a tool, a wealth of tools in your actual myEcon back office. And so you will need to go there and you will access this, okay? So the first thing is, let me raise this up, is last week we showed you our W4 employees withholding allowance certificate, okay? Now, for those of you who are retired, although I did not go over it, I did not, because we don't just specialize in that, but it means the same to you as the regular W4 in your job. You will need to know this line right here. It says, if you receive a pension income, you can use the results on your W4P, okay? So those of you who are retired, those of you, you know that you're going to retire, guys, get ahead of the game. Take a look at this W4P form. Know where you're supposed to go and get that form completed, or see what it is that you will end up having to complete and give it to your payer, okay? That means the people who are giving you your money, your annuity or your retirement, okay? Now, let's go here. It just simply says plan ahead, tips for using this program. So right here, it tells us that the calculator will ask you to estimate values of your 2018 income. That is the number of children you will claim for the child tax credit, earned income credit, and other items that will affect your 2018 taxes. So we are now in the 2018 tax season. This is a little late in the year, because we preach this all year for us to get this done. However, it's never too late when you are strategizing, because you need to know where you are. You need to make sure that you're not having too much or too little taxes deducted from your income, okay? So here are some things that you will need when you get to this calculator and you get ready to do it. First, gather your recent pay stubs, okay? Your recent pay stub is actually going to have a question that's on this calculator that talks about the income that is being deducted, or the taxes that's being deducted from your form, from your check right now. In order to calculate it more accurately, you will need to know that, okay? So obtain a copy of your pay stub, okay? Do this for you and your husband. If you are married, filing jointly, we're going to talk about that. You need the information for both you and your husband, okay? Then it tells us, have your most recent income tax return handy. A copy of your completed 1040 will help you estimate your 2018 income and other characteristics and speed the process. So there are going to be questions, particularly, how do you file your taxes? How many dependents do you carry? Will you carry those dependents next year? These kind of things will be on last year's tax return. And so it's just real simple. It's just easy for you to call that up, get your first couple of pages on your 1040. You don't have to have all of the disclosures that come with that tax return, but just get these few and you're going to be all right, okay? Then it says, keep in mind that the calculator's results will only be as accurate as the information you provide. So this is why you don't want to try to cheat on this calculator, because if you cheat, it could mean you actually lose money, or you pay in when you file your taxes. It's just around the corner, people, and it's already time to get ready for it. The withholding calculator does not ask you to provide sensitive, personally identifiable information like your name, social security number, bank accounts, address, and none of that, okay? It is simply an estimate. You don't have to put that in. Matter of fact, I don't believe that it's actually going to even save. I don't think you can save it, but you can print it. You can make a PDF copy and print it for yourself. You can show it to your spouse and you guys can have a conversation. I want to chunk this in here for good measure. A publication that you should go and review, okay, that has a lot of information that's going to help you with complex tax situations, is in publication 505. I think in order for you to have knowledge about your finances even more so, this would be a great reference for you, okay? So if you're there, you understand it so far, please let me know before. Give me some likes, some hearts, do some things. Let me know that it's okay so far, okay? Let me know you're still here. Tell me you're still here or something, okay? All right. Now we're going to move on. We're going to move on while you do that. We're going to go to the calculator. Withholding calculator. Okay, so we just simply type in withholding calculator. All right, I'm going to raise this up. Some people can't see, kind of like me, can't see that well. Good job. Glad you're here, Equan. All right, so remember, guys, since you said that, Equan, remember, this is what you're going to pass along when you start building your team. This is information. All these videos you might want to archive and repeat. You don't even have to say them. If you want to share with your team as you build your team, then you just simply show them my video. You guys work it out together, but you'll have your reference to help your team as you build it. Same thing with you, Marvestine and Patricia. This is so simple because those of us who are knowledgeable make these videos that you, if you're an introvert, you don't even have to talk, okay? So let's take a look at this general information. It's going to ask us our filing status, okay? Our tax filing status. Every person should know what their tax filing status is legally, okay? We won't go back over that. However, I'm going to do a married filing joint return. And then this question is simple. It asks you, can you be used on someone else's return as a dependent? So I'm the wife, okay? And no, I cannot. So we're going to continue. Very simple. Let me raise each page so that you can see better. Wonderful. Okay, so, and I can too. Now, let's take a look at this. And our general information is asking us to select the number of jobs in which you and your spouse are currently or will be employed. Okay, so if your spouse has a job and you have a job, then we're going to put it there. Or if your spouse has two jobs and you don't have a job, then you need to put it there. So I'm kind of giving a scenario there of my spouse having two jobs and me having a business. You're going to see that in a moment, okay, as a spouse. Checkbox if you or your spouse held a job this year but are no longer employed in that job. Okay, so you know the answer to that if that works for you. Check if you or your spouse contributed to the tax deferred retirement plan, such as a 401k this year. Okay, this is why you'll need your check stub, because that information of how much you gave or put into your 401k will actually be on your check stub. Check box if you or your spouse contributed to the cafeteria or other pre-tax plan, such as for health insurance this year. Okay, so listen, people, I'm not going to click on these, but I do want you to notice if you click anything you don't understand, it's there, and they have made the information so simple for you to understand. Check if you or your spouse received a scholarship or fellowship grant this year that must be included in your gross income. I ran into a situation where my daughter had filed her taxes and she worked for AmeriCorps. Okay, so you'll need to find that out. And the income that she made from AmeriCorps was supposed to be, it was a scholarship program to help her get through school, but it was supposed to be reported as income. How about a couple of years later when she filed her taxes, they came back and said, you should have filed this. And now they took some of her money from the present tax return. Okay, so you want to know where all of your income is coming from, and then if what part of your income has to be reported to the government. All right, now select the number of dependents you will claim on your tax return. Okay, so we're going to say 2. Okay, check if you will be 65 or older on January 1st, 2019, or you are blind, your spouse will be 65 or older, and so forth and so on. Okay, now your child dependent care. Select the number of qualifying persons for this credit. Okay, now they're talking about child tax credit. If you don't understand that, then it has information here that will help you understand it. But just to give you a brief scenario information on that, if you have a child that you take care of that is 17 years old or below, then you will be qualifying for, I'm sorry, I'm on the wrong part. That's child and dependent care credit. Sorry, people. That is about daycare center. If you go to have a child that you pay for who has daycare, and you're actually going to file those expenses, my son behind me, and you're going to file those expenses, guess what? Then you will want to put that number there, and then you're going to want to put how much that is. So if it were one and you paid $4,000 a year for their child care, then yes, you want to put that information in there, okay? So I'm trying to see if I want to make myself have dependent care. Nah, because we want to talk about y'all who's past all that. So, but it's good while it lasts. Okay, now let's go to child tax credit. Now, qualifying children, all right? Now, see how you click on that and it just gives you a sidebar of information that's going to teach you or tell you what this means. Child tax credit. You may be entitled to a child tax credit for each of your qualifying children. A qualifying child is your son or daughter, adopted child, grandchild, stepchild, or foster child who is, number 1, age 17 at the end of this year. That means December 31st, 2018, a United States citizen or resident alien who is a holder of a Social Security number, okay, issued before the return date, and then claimed as your dependent on your tax return, okay? So we have, note, the calculator will also determine the non-child dependent credit for you based on your total number of dependents and this number of qualifying children. So this couple does not qualify. those children are 18 years old. Okay, matter of fact, they're in college. There are 2 children in college. I told you I'm getting close to my scenario. All right, because it's the worst. It's where most of us are. Okay, so now earned income credit. Let's see what that is, because most of you think that earned income credit is for those children who are younger. And then I get a lot of times people saying, I can't use my 18-year-old on my taxes. They're in college. Somebody tell you that you're not supposed to use them on your taxes. Let's see. Let's see here what this information says. And this straight, remember, from IRS. It says earned income tax credit, or EITC, is a credit for working families. And working is a key, okay? That's why it's called earned, because sometimes you people will not see an earned income credit for you or as an individual or for someone because you don't have working income, okay? So if you did not claim the EITC on your last tax return or your circumstances have changed, please review the rules below to see whether you will be eligible before calculating your withholding. So to claim a child for EITC, you must live with the child for over half a year. If this child is in college, people, that college does not mean that they do not live with you, all right? You, your spouse, and all claimed children must have a valid Social Security number, not an ITIN. And then your children must be under 19, okay, or a full-time student under the age of 23, or permanently and totally disabled. Now, this still doesn't disqualify those children from being on your tax return. It only, if they're over 23 and they're in college, it disqualifies you for earned income tax credit, okay? So, and it says you must meet other requirements and so on. I want to give you that little bit. You can read it on your own time. So we got 2 kids that are in college that are under 23. Okay, other credits. Enter the total of other credits for which you expect to be eligible. Okay, so here is a list of those other credits. If you, okay, let's look at that. We've got credit for elderly or the disabled, education credits, adoption credits, foreign tax credit, retirement savings credit, mortgage interest credit, general business credit, qualified electric vehicle credit, credit for prior year minimum tax if you paid alternative minimum tax, health coverage tax credit, the premium tax credit for those who purchase health insurance through a health insurance marketplace, and the District of Columbia first-time home buyer credit. Okay, they have the publications and forms beside there, then you complete them. Okay, so if you're going to get a child tax credit, or a education credit, okay, just say we may get an education credit for $2,000. That would be because both of them are in college and we get that 1098 form, okay? And we know that. So you got to check this kind of information out. We will put that information there, okay? And follow their tip, okay? I'm not going to do that part. So let's get to the meat. Now, we're here in the income and withholding. Wage, income, and withholding. Enter 0 for any amount that does not apply to you. Now, people, this is where you got to read. Common sense. Do not make this hard at all. So we're going to enter in salaries, tips, and wages expected for 2018. That's a total. That's from that first job. Remember, we put in 2 jobs, and the spouse has 2 jobs. So we're going to put in this amount here, and we're going to put in the second job brings this amount, okay? Now, we're going to say enter any bonuses that you receive. No bonuses, okay? Federal income tax withheld to date. Let's see what was withheld so far. 1,500 over here, 500 over here. Okay, just throwing out some numbers. This is where you're going to have to look at your pay stub to see your present federal income tax withheld to date. All right, everybody got that? Enter the federal income tax withheld from your last salary paycheck. Okay, so let's say the last salary paycheck was $65, and let's say this one was $25. I'm just giving some numbers, no specific reason, people, just putting it there. We're gonna see what the income is going to be, okay? I'm sorry, the tax liability. So select how frequently you get paid. Okay, so we're gonna say monthly. Okay, job 2, every 2 weeks. All right. Now, select the date closest to when you first held this job. They already have default in here, January 1, January 1. So if you've been working both jobs all year, fine. But if not, perhaps you got this job in May. Okay, so we're going to change the second job to May. Select the date closest to when this job will end. Okay, the fitting is at the end of the year. The fitting is at the end of the year. Okay, these people are working 2 jobs to make ends meet. All right. Now, non-wage income. Enter the total of any other taxable income you received or expect to receive in 2018. So let's see what that is, people. Wasn't intended to make it that big. That's tips, if not already included in the wages, because now they ask for tips because, believe it or not, people who work at Sonic and the pizza joint and these places, if they get tips, they go through that cash register, they have to actually include that in their income. So they're taxed on their tips. Okay, or net self-employment income, professional fees paid to you and any other compensation received for work you performed in your own business, less deductible related expenses. How cool is that? Now let's talk about that, because this is what you got to know. When you work, you are taxed on your gross income. When you have a business, you are taxed on the income that is left after your deductions. Let me say that again. You're taxed on your gross when you work. When you have a business, you can make $20, $30, $40, $50, $60,000. But if you have $40,000 in deductions, $20,000 is what's left. That's what you are taxed on. So don't put all of your income in there, but just put a significant amount in there. And it may be, say I just, in myEcon, and I made about $6,000 extra this year. After my deductions, right, I actually end up having no income. So, but I'm gonna just say this. We're gonna say we end up having $500 because we took records and we worked our business. Okay, so we got a profit. Enter any unemployment compensation. And listen, let me tell you this. I only put this in there because if you are in business, you should be keeping up with the income that you make, and you should be keeping up with your deductions in some type of system that's going to give you a profit and loss statement, and you'll know where you are from month to month, week to week. Okay? Enter any unemployment compensation you receive or expect to receive in 2018. Here's another issue. People will get unemployment and they will not have taxes taken out of it. So if you do, you better make sure you can cover this, okay, at tax season. Enter an estimate of any other non-wage income you expect to receive, such as dividends or interest received, okay, because I'm right here, people. So get this. That means that if you have an annuity, if you have a spouse that died, a spouse that retired, or you retire, you get extra income from retirement, these types of things, some type of interest-bearing account, then you'll get monthly income you'll need to report, but there's none here. Enter an estimate of 2018 adjustments to income, including deductible IRA contributions and education loan interest. So if we're paying back a loan on a monthly basis at $80, say $80 a month, then that $80 that I'm paying times 12 is what's going to be deductible. Now you got to make sure you turn this in, okay, so that you can get a credit for it. And that would end up being like $960, okay? Or if you learn from myEcon and start to put back passive income in an IRA contribution, you get a chance. If it was $2,000 that you put in at the end of the year, you can put up to, I think it's $5,000 or $5,500. Then if you put that amount in there, it becomes tax deductible, okay? Just want to chunk that in there for good measure. You're going to learn that as you go. Now we're going to continue. Now let's take a look at deductions. If your standard deduction, $24,000, because we got married, filing jointly, is more than your total itemized deductions, your standard deduction will be used to calculate your withholding. So this is about your itemized deductions on your Schedule A form. Let's pull this up. Okay, Schedule A. The disadvantage in Schedule A is that you got to have this amount above your tax filing status, okay, or your standard deduction, what is allowable for your standard deduction, okay? So if you don't have in this area, these areas, okay, have spent a lot of money in that area to add up to 24,000, then it's not going to work. However, I tell my clients to go ahead and give me this information because it helps you on your state income taxes. So let's say medical expenses was about $6,500 that year. I didn't pay any taxes, didn't pay any interest on anything. But guess what? You turned around and was obedient to God. You paid your tithe and your offering. This income is like $105,000. So that would mean you paid $10,500, okay, no, well, wait a minute. That's tithe. Let's add some offering there. Let's say I paid pretty good in offering, $18,500. I may have even given away some things. I gave away a car, and I got a $500 credit that I can get from that. So it's going to be $19,000. All right. And any other itemized deductions, let's click on that. That means other that may be claimed into gambling losses, certain job expenses, deductibles, that, okay? So none. I'm gonna click 0. So being obedient helps a lot. All right, now we got the answer. See how simple that was? We got the answer. So your results are right here. Based on your responses, your anticipated income tax for 2018 is $6,595. If you do not change your current withholding arrangement, you will have $2,435 withheld for 2018, leaving $4,160 due when you file your taxes. So now it's telling you to meet your anticipated tax of $65.95, change your current withholding arrangement by claiming 0 allowances plus an additional amount of $1,248. Now, when they say that, that can be divided by 12 or by the next few months that you have. So this is September, October, November, December. You need to divide that by 3 and have that amount taken out. Or if you are operating your business with the intent to make a profit and you have expenses that you are incurring, you are logging that information into your cash flow manager, keeping up with your tax deductions. You are creating deductions. How about this number here means that you should have at least $4,160 in tax deductions to write off at the end of the year in order to break even. So the advantage here is you would have gotten your money on your paycheck. You will have operated your business part-time or full-time. If you have a job, you probably operated just one of us. As a matter of fact, let me say this. The husband has 2 jobs. The wife has a business. And if she operates that business accordingly, then she can deduct those expenses. So one of you can have a business or both of you can have a business to be safe on a part-time basis. All right? You can earn that income. If I went back on this form and I took that, if you remember, the second job was $25,000. I want you to know that if I went back, see, this will not allow me to go back. I will have to start over. But I want you to know that instead of getting a second job to make $25,000, that's going to give you more tax liability. If you got a business, a home-based business, and you made $25,000, then you turn around and invested that money back into a tax-deductible IRA, how about you would end up writing that $25,000 off? Okay? Does that make sense? Does that make sense to you guys? I'm thinking of a form I should have pulled up for you guys to see the scenario and how powerful income shifting strategy is. As opposed to sales, you just make money. But strategy, you keep money. So all of you who are a part of myEcon, learn the strategy. The sales come within the strategy, but the strategy gets you more money. I hope you will see that in the long run, that it is worth introducing this system to others, to your family members, to your friends, to your neighbors, to your church members, to everyone, especially those who are losing dollars when it comes to taxes. Okay? Do you have any comments? I think I'm going to try to pull up that form. Hold on a minute. I am going to see if I can pull up that form in myEcon, because you guys need to see it. And so much has changed in here. I'm not sure if I can get to it quickly, but I'm definitely going to try. So let's see. We'll go to Document Center. It's just that easy for you guys to pull up your information. So I'm going to pull this up, and let's see. Let's see if I can find it here. Let's see if it's in our Schedule C examples. All right. Let's see if this is in our Schedule C example. You guys give me a minute. Give me some comments, some likes, some hearts. Let me know if you understood this. See how simple it was. We got to the answer just like that. And that's how you can do when it comes to your income as well. Let's see if that document is still here. Okay, yes, wonderful. It is there. People, you got to see this. So we just did the tax liability withholding form, okay? And this is the person. Remember I told you that second job of $25,000? Well, this scenario is on $75,000. So this is the W2 income worker with no home-based business with $75,000. This one has a home-based business of $75,000, and this one has a home-based business of $75,000, but there's going to be a different scenario. Now, the business income, none, of course, because they only have a job. Okay, in this category, these people actually had income of $5,000. All right. When they grew their business, these people actually make $40,000, yet they still have their job. Y'all see that very clear. Still have their job, but they made business income of $40,000. Now, in business deductions, let's take a look across here. These people that had a job had no deductions. These people who made $5,000 in their part-time business had $20,000 in deductions. These people who made $40,000 had $20,000 in deductions. Now, that brought their net income to this. Zero, because that $75,000 is going to carry with the people who only have a job. And this scenario, that $20,000 is deducted from what was made, which gave them a loss of $15,000. The $20,000 were deducted from the business income of $40,000, which gave them $20,000 in profit. Now, additional tax deductible investments. These people are using an income shifting strategy not to play with their money, but they have their cash flow strategies completed. They are now at the point to where they have started to invest the income that they get from their extra business, okay? They took that and invested the $5,000. They took their $20,000 here and invested that $20,000, okay? Now let's show you how sweet this is and powerful. The gross income, adjusted gross income for the people who did not have anything but a job was $75,000. The adjusted gross income for the first scenario are the people who made $5,000. They lowered their income to $55,000. Then the other people did not lower their income, but you're going to see the advantage. But they still came back at the same amount of money, which was $75,000, and they made $40,000. That's pretty sweet. So the standard deduction, and this is an old form, I've got to tell them they need to update this, but it used to be $12,600. How about It may be $24,000, which is going to make this number a whole lot better. Okay, but on the old tax rate schedule, it was 12,600. Exemptions they had was one child. Okay, so this made them have an exemption. We don't have any exemptions anymore, but you're still going to see the scenario. So it lowered their taxable income to 50,400, 30,400, 50,400. Therefore, look at what happened. The people who didn't have a job paid in $12,600. They were in a 25% tax rate. Okay, the people who just made $5,000 extra in their business, look at how much they saved. They only paid $7,600. These people over here made an additional $40,000, but they still paid in $12,600. But check this out. These people actually had the type of money they needed to create passive income. Okay, by taking that $40,000 or taking that $20,000 and investing it, they still save money. So people, I hope you see this scenario for what it's worth, because if you go and complete this W-4 form, calculator, you will understand what it is that you need to do to strategize for your tax season. As a home-based business owner with myEcon, you can make money and you can save money at the same time. Okay? So if there's any questions out there when you see this video, go ahead and put them there. But guess what? That's this week's homework. You should have finished last week. This week is to get that tax liability calculator done. And then guess what we want you to do? We want you to share your experience right here on the group. You can share it on GroupMe. We definitely love for you to share it inside of the Facebook page as well. Okay? All right, guys. That is your Monday Lunch and Learn. I'll be back on next Monday, Lunch and Learn. With that subject, we're going to talk about our deductions as a home-based business owner. And I'm going to show you those deductions and how to take those deductions. Meet me tonight, because tonight on our regular Monday night training, we're going to share more of how to market your business, okay? So let's go up and smoke, people. Let's make money. Let's save money. Let's make money, make money. God bless you. This has been Clarissa Pace, Monday Lunch and Learn.